Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's get across what happened overnight. Equity markets rallying along with bond yields while oil futures tumbled as a preliminary peace agreement between the United States and Iran was expected to ease inflationary pressures and lessen the need for higher interest rates. So on Wall Street, the Dow hit a record high, the Nasdaq surging more than 3%. Rate-sensitive tech stocks, they rallied as investors took on riskier bets with lower oil prices easing those inflation fears. Stocks specifically, SpaceX's shares rallied almost 20% in their second day of trading after the Elon Musk-led firm's record-breaking IPO pushed its valuation above $2 trillion. The stock closing at above $192 compared with its IPO price of $135. Chip giant Nvidia rose, along with Micron, which soared after at least two brokers raised their price targets for the stock. Airlines are among the leading transport sector gainers, with United Airlines rallying on hopes for cheaper jet fuel and oil prices falling, and the cruise companies are also benefiting. And US oil and gas companies slumped, reflecting weaker crude prices, while US listed shares of BHP and Rio followed the price of copper higher. And shares in Fox Corporation tumbled after it said it would buy Roku in a $22 billion deal. The deal gives Fox access to more than 100 million households using Roku's platform, and is its first major acquisition since Chief Executive and Chairman Lachlan Murdoch cemented control over the media empire last year. Well, President Trump says a preliminary agreement to end the war in the Gulf has already been signed by the United States and Iran. He made the comment as he arrived in France for a G7 summit, saying that Vice President J.D. Vance would attend a formal signing ceremony in Geneva on Friday. Well, the agreement is expected to see a reopening of the blockaded Strait of Hormuz and extend a ceasefire for 60 days, allowing negotiators to tackle issues such as the future of Iran's nuclear program. Another likely sticking point is Lebanon, with Iran demanding a full cessation of hostilities there and Israel's withdrawal, which it has refused to commit to. Meanwhile, the world economy has weathered the shock of the war in the Middle East despite a surge in commodity prices, higher inflation and strains in financial conditions. That's according to the IMF, which has said there are no signs yet of a global slowdown. The IMF will release an updated global growth forecast next month. In April, it forecasts an adverse scenario of 2.5% growth this year and headline inflation of 5.4%. US Treasury yields have fallen to a one-month low following the confirmation of that deal between the US and Iran. The 2-year is around 4.07%, the 10-year at 4.47%. Australian 3-year government bond yield futures rose to 4.45%, the 10-year at 4.88% ahead of today's RBA decision on rates. US dollar index down slightly. The Aussie is currently trading at 70.7 US cents. Well, oil prices have fallen to a 3-month low after the US and Iran signed a memorandum of understanding to end the war and reopen the Strait of Hormuz. Brent crude down more than 4% to around $83 a barrel. Gold rose for a third straight session. Spot gold at around $4,305 an ounce. Copper futures were up 1%, as was iron ore to 104 US a tonne. And Bitcoin currently trading just above 66,000 US dollars. Let's get across those market moves. A reaction to that development out of the Middle East. Steve Sosnick, Chief Market Strategist at Interactive Brokers, joining us again now. Steve, welcome back. Of course, markets bouncing, certainly risk assets off the back of that news. Still not a lot of detail. And Steve, it has to be asked, what has that war actually achieved?
Good morning, Andrew. That's a question I think everybody but equity investors are asking themselves. Is what was really the outcome? I mean, when I was watching sort of general news programs just before, and that was a question that's being asked: is what has been accomplished? Regime change? Not really. Getting the nuclear capabilities away from Iran? Maybe not. We've now since learned that the Strait of Hormuz can easily be shut and susceptible to tolls without major military action. So it does seem like the strategic goals may or may not have been met. Let me put it that way.
Well, still, you can't fight the momentum, can you, at the moment? Because you put this succinctly by saying it's buy the rumour, buy the news at the moment.
Yeah, that's pretty much what it is. I mean, we had our little flirtation with a bit of a, mini couple of bad days last week, about a week and a half ago. But since then, we've been moving steadily higher with each day, with each pronouncement about good news coming out of the Gulf. And rather than sell, the typical buy the rumor, sell the news, off we went today. Now, I think it's kind of telling that the stuff that moved the best today was, industrials did very well, which they should. But then the next best, but really the leaders were the technology stocks, which are not essentially affected by the goings on in the Strait of Hormuz or the Persian Gulf. So it's really just a matter of saying this is momentum, it's risk tolerance, it's not even risk tolerance, it's risk seeking, because we're back sort of very quickly to the mindset of the more risk you take, the better you do, and people now, seeking out momentum trades and why let a few details about what may or may not be in this deal that may or may not have been signed affect people's outlook on AI related stocks.
Is it also relief in terms of perhaps that interest rates may not be hiked, or if so, not as far as anticipated, given obviously the inflationary effects of oil, if that comes off, that dissipates. But we'll get much more information this week, won't we, Steve, when the Fed meets for the first time under the leadership of Kevin Warsh?
Yeah, the FOMC meeting is always, must see TV, the press conference, I should say, after the FOMC meeting. And I think this one's going to be even more so than usual because it's literally going to be the first press conference by the new Fed chair. And so I think he's going to get a wide range of questions. He's going to get an opportunity to outline the path that he chooses to take, how he's going to reconcile, price pressures that, to be fair, have eased a little bit, but we're still looking at oil prices, by the way, that are $10 above where they were, immediately prior to the war, and $20 above where they were about 6 months ago. When I say that, I'm talking about oil futures out into January of 2027. So, there's still plenty of traction that needs to be achieved in terms of price stability. And so let's see what he has to do. He's also, claiming wants a little bit less clarity, a little less forward guidance, a little less chatter from FOMC members and Fed governors. He may or may not want to get rid of the dot plot. So, there's a lot to be learned from him when he talks on Wednesday afternoon, our time.
Mm. Now, obviously, oil remains in focus given what's going on there. Steve, in fact, we've got a chart which you've highlighted here, just in terms of how long potentially markets pricing in is going to take for oil prices to return to those levels we saw prior to the beginning of the war. Just talk us through what the likelihood is here.
Yeah, I mean, what's interesting is, and I don't have the chart, I don't see the chart up yet on the screen, but this is what I was referring to in my prior comments. Oil is still in a pretty decent set of backwardation. There we go. Okay, so the blue line on top is where we were on Friday, and the green line the green and white line is basically where we were trading today. So you could see the improvement, and certainly, call it 5% lower at the front end is good improvement. But as we go further out the curve, it's still pointing downwards, which means that there's concerns about longer term supply. When you see a futures curve in backwardation, it means that there's greater demand in the short term than there is supply to fill it. We saw the purple line is where we were on February 27th, the day before. So you could see there was a little bit of nervousness creeping in, a little backwardation, but not terrible. But if you look at actually the orange line at the bottom, that's where we were 6 months ago, mid-December. And you could see actually oil was plentiful then. But I think the feeling here now is that it's going to take some time, because one of the reasons that oil prices didn't go up quite as much as I think people feared was that there was a lot of discussion about basically inventories being taken down, strategic reserves being taken down. You've got to think that there's going to be some demand to refill that. It's basically get normal inventories back in order, but I still think there will be a need for Certainly the U.S. and China, which drew down, and Europe, which drew down a lot of strategic reserves, to want to refill those. And so it's going to take some time for things to normalize, and that's one of the problems I think that Kevin Warsh has to deal with. And that curve shows it. That white line is January 27, and you could see that things are still very expensive. We're still talking about $70 a barrel on West Texas, and a little bit higher on Brent, even out to the end of the year.
Now, Steve, I have to ask you about SpaceX. What did you make of that debut? Shares bouncing higher again today. Look, I mean, it's not a profitable company. Mind you, we've seen this before. What have you made of that?
Well, in terms of the activity, I think it was not a bad thing that it closed sort of up 20, it closed up 19% each day, basically. That actually is not bad from an IPO point of view. I think it's healthier that we didn't see it, go up 50% or 100%, sequentially. Although if you're starting to get in to think that it's going to go up, 19, 20% a day, well, that may be another story. We saw our customers very actively buying into the shares yesterday. I don't have today's data yet, so I can't comment on it. I just don't know. And you can see there that little tick up right at the end. One of the things that happened today was, despite the fact that there's no listed options on the stock yet, they listed double levered ETFs, and I think there was like 11 of them that came out, maybe 50. I forget the exact number, but double-digit number of them. And those, they have to hedge at the end of the day. And so I think that last little gasp upwards was caused by the the advent of the leveraged ETFs. You raise an important point. It's not a cheap company because we were among the selling shareholders. I can't get into too much detail about that right now. But obviously, as with all things Elon Musk, there's a heavy dose of futurism priced into the stock, and that's why you see investors willing to pay up for it, and in the same way that there's a huge call it Musk premium built into Tesla shares. I think we're seeing the same thing getting priced into SpaceX shares.
Fascinating, and particularly where that is likely to go. Steve, great to get across it all. Thanks for joining some Interactive Brokers.
Thank you, Andrew. Take care.
Okay, let's focus on the open here, just a couple of minutes away now. We are expecting to unwind those gains we saw yesterday. Let's take a look. In fact, I don't think we've got the chart up, but last time I checked, S&P ASX futures, they're off by 1.1%. So we've had that rally, with the relief rally, that's over. Let's move on then, perhaps, as to where we're at on the local market, despite that rally we saw in global markets overnight. Stay with us, we'll get across it all in just a couple of minutes.